Good morning, Jags. This is Fahad. Today is Tuesday, October 13th. Let's get started. So, for two large cap names, it's a very important day. The first one is Apple. Apple. So today is the Apple event when it is widely expected that the 5G iPhone will come out. Not much more to add. And frankly, I do not have any position in Apple right now. I don't even know if I will take one, ahead of the event. I just want to see what kind of phone this will be. And then once the phone is out and depending on the price section, then I will decide whether it's worth a position or not. Today also happens to be the Amazon Prime Day. Actually, it's today and tomorrow. Now, here I do have a position, as you all know, the one that we discussed in the quarterly outlook, and this stock has been a fabulous, fabulous producer of some very large gains in portfolio consistently since the start of the year. Amazon remains among the all large cap names one of my favorite stocks to own, so I'm expecting very, very strong Prime Day sales today and tomorrow. And I think that by the end of the week or possibly by early next week, we'll start to get some positive results or some discussions about how it went. So just to pointing out, both of these stocks are very important events today. Now, with that said, I do have one stock that I want to discuss real quick, and that's Foot Locker, FL. Now, some of you may remember, but if you go to JaguarMedia, you may remember this conversation from August 29th, right? In which I discussed a bull case for Foot Locker. And I said that this stock is set up for a technical breakout. And the reason for that was there was an emerging theme that was appearing in front of me, which was when Dick's Sporting Goods posted really, really strong quarter. Then Hibbett Sports started to shed some light on sharply improving trends for its sports-related athletic apparel and all kinds of things. And so across the board, we started to see very positive commentary, which led me to issuing this positive outlook on Foot Locker. Back then, the stock was at 30 or 29 to $30 per share, and I had pointed out that it's going to break out to $30 per share. And I think if it does, there's a big air pocket. This can easily rise up to 38. It did exactly that over the past month and a half. On a percentage basis, since that video was posted in Jaguar Media Conversations, the stock is up about 23%. Now, this morning, with stock now attacking this major VOP resistance around 38.50, Bank of America is out with a double upgrade, going from underperform or sell rating on the stock to a buy rating on the stock, and sharply really is raising their price target from $20 per share to $50 per share. And so a very positive note. They're a little bit late in the game, but they finally recognize the same improving trends that we had highlighted in late August in the morning conversation. From a pure technical standpoint, this stock is likely going to break out through this 38.50 major VOP resistance now after pausing here in a tight bull flag. If you look at pre-market, it's already doing that. The stock is closed at 37.60 yesterday, but is set to open around a little over $39 per share, which means it's going to open above this line today. Now, let's see if that's enough for this to create a sharp power candle and then make a run towards $44 to $45 per share, which would be my next price target, because once again, there's an air pocket above this stock from 38.50 all the way to 44.50. I would also like to point out just the incredible strength that we have in this space. If you look at Nike, take a look at this stock, including the last quarter when they posted earnings, the stock has been very, very strong. Then you look at Hibbett Sports, take a look at this stock. I mean, this is just incredible, right? When have we thought that a company like this, Hibbett Sports, would see a monumental rise of over 50% from 25 to over $50 per share in just less than 2 months? And as you know, we currently have a bullish position that's open in Skechers, SKX. SKX has a similar kind of a technical setup, and I wonder if this thing is going to run with Foot Locker in sympathy today. This is stock too in the last couple of days on rather elevated volume. It has started to emerge from the base, and I still think that Skechers is going to grow gradually higher. Now, going back to Foot Locker a little bit, it's important to highlight a couple important things. The chart that you're seeing in front of you is the stock price of Foot Locker, which is a yellow line, or orange line, whatever you want to call it, versus Foot Locker year over change in Google search trends for the trailing 4-week period. And you will see that beginning this blue line, beginning from middle of August, we started to see search trends in Google for trailing 4-week period started to surge sharply for Foot Locker. And I believe this is mainly because Bank of America is also pointing out that back to school season has been very, very strong. And some of the lingering effects of the large stimulus package that was passed with the $1,200 and $600 per week, and some lingering effects of that is also playing out. But there's a couple different things that you need to keep in mind. In this upgrade note, Bank of America is really bullish. They're raising their fiscal year 2021 EPS estimate from $2.10 to $2.55. That's a huge increase. And their fiscal year 2022 EPS goes from $3.50 to $4.90. You can see that's a very, very large increase, which means looking out over 2-year period for now for Foot Locker, this stock is basically now trading at only 8 to 9 times, or about less than 8 times earnings. Now there's several reasons for that. Like I said, there's back to school sales and Nike product momentum, including Air Force One, Air Jordan 1, Blazer, and Retro Jordan should continue to drive same-store sales upside. Nike represents 71% of the sales for the company, and Nike reported a blockbuster quarter just a couple weeks ago, so there's a very strong positive read-through from there. It is also now expected that based on these improving channel checks as well as mall traffics as well, the fiscal year third quarter earnings, which will come out in a couple of weeks, will show a 10% increase in same-store sales growth. And this is confirmed by the aggregated credit and debit card spending of 129 mall-based retailers that has been throughout in the month of September and so far in October. And lastly, this Google search trends, which basically showed an inflection point. And so putting it all together, I do believe there's still momentum in this name. I don't think it's still done going up. I expect another breakout, should get above $40 per share rather easily. And then I think it still gradually marches higher from here towards $44 per share. All right. And keep an eye on Skechers as well in sympathy. That's it from me. Jay?
Morning, Todd. So today I just want to highlight an under the radar stock that you actually brought up yesterday internally, and that was Retractable Technologies, symbol RVP. The company designs, develops, and manufactures safety syringes. Its products include the Vanish Point insulin syringe, which comprised 80.8% of total sales in the first half of 2020. They also offer the Easy Point needle as well as the Vanish Point blood collection set. The company manufactures these products both in their Little Elm, Texas facility, as well as utilizing manufacturers in China. Now, according to their 10Q, the company obtained roughly 83.5% of its products in the first 6 months of 2020 from China. Now, middle of August is when they last reported their earnings. And one of the themes was that, they experienced an increase in demand for its products due to the pandemic, and they were able to meet such demand. Domestic revenue was up 20.1%. Domestic unit sales were up 25.4%, while international revenue was up 35.6%, and international unit sales were up 25.2%. Now, there wasn't much else in that press release because there was no transcript, there was no earnings call after that. So I looked over the 10Q last night, and there were a few other pieces of information that I thought were interesting. Number one, it talked about how effective July 1st, the company entered into a technology investment agreement, or a TIA, with the United States government for approximately $53.7 million in government funding for expanding their domestic production of needles and syringes. And then on May 1st, they were awarded a delivery order under an existing contract by the Department of Health and Human Services to, again, supply automated retraction safety syringes. The 10Q goes on to say that the existing contract was executed in September 2018, but the order placed on May 1st is unusually significant. In the second quarter of 2020, their sales under this order were approximately 1.4 million, and the company expects these sales to increase each quarter through May 2021. And then finally, the 10Q points out that historically, unit sales have increased in the latter part of the year, largely in part due to the demand for syringes during flu season.
Very interesting. I'm looking at two things over here. One, for the 6 months ended June 30th, the company's total revenues increased by 30% year over year to 22.8 million. It was sequentially improved as well from the prior 6 months. And this was before they started to capture any upside from the contract that went into effect in May, which will only accelerate from here for the next 4 quarters as well.
Yep.
So on an annualized basis, this company is doing about $50 million in revenues, and it has a market cap of 300 million. So the stock is not expensive. It trades at about 6 times sales, growing 30% year over year, which will likely accelerate based on these very contracts that you discussed. So that's the first thing that stands out for me, right? There's reason to believe that it will continue to get re-rated with higher valuation with that kind of a growth that's emerging and contracts in place. And secondly, from a product standpoint, I really wonder how big is this market for these kind of syringes in terms, is it something that is very disruptive for the traditional kind of syringes that we're all familiar with, or is it something that's just uniquely positioned to benefit for some niche categories and doesn't have the ability to expand to the larger scale to everything?
Well, one of the things that I also found in the 10Q, it talked about how, and this actually is more of a risk than anything else. They had filed a lawsuit with some of the, I think, the legal representation that they had against Becton Dickinson. And if you just search for both of these companies together, you will see that basically since 2001, there has been a continued case battle between these two companies back and forth. So the market is definitely, it's there, and it is large enough. I know that I think the original case was about patent infringement claims, which Retractable won at first, but then the judge overruled that and it went to Becton Dickinson. So there's just been a back and forth between these two companies, and that would be something to keep in mind. It just seems like a never-ending battle between these two.
Becton Dickinson is a $70 billion company, and this one, Retractable Technologies, or RVP, is a $300 million company. I mean, if you have such a huge problem with the lawsuit and patents and whatnot, it's trading at only 6 times sales. You can just buy them out with pocket change and then be done with it. But I think that may also be a testament to something very simple from observation standpoint, which is that if Becton Dickinson is threatened, maybe they see something here, right? That's why they continue to go back to the courts to fight for all these patents. Chart looks absolutely fantastic. I did see a little bit of a unusual pickup in short term, and as well as October, November, and January. This is not a lot of dollars, so you're not going to see much to see over here. It's a single price of stocks, $9 and change, but there were some 10 strike call buying yesterday, October, November, and January. I won't go into the details of that. It was retail size trades, but the important thing is that I think these contracts could be significant, and I think stock is getting re-rated gradually after pulling back. So it wouldn't surprise me if this gradually returns to new 52-week high from 920 right now back to 13, which on the percentage basis, you're looking more than 30% gain basically from here. Interesting company, one to watch going forward given this technology. All right, fantastic stuff. Chronicle.
Morning, everyone. A very quick preview of what we have lined up for Jaguar Media. I have two videos planned, one for Chinese Tech Demystified and the other for Jaguar Investing. So the next video that's going to come out will be a Chinese Tech Demystified episode on a fintech company called One Connect, symbol OCFT. This is a 2015 spinoff from Ping An, which is a massive financial behemoth in China that everyone's probably come across. And this company, One Connect, what they do is they provide a wide variety of cloud-based fintech platforms for Chinese banks and financial institutions with emphasis on AI, big data, and blockchain. Currently, they serve all of China's largest banks and virtually all of China's city commercial banks, as well as slightly more than half of all insurance companies across the nation. So as always, we're going to be looking into how this company grows revenues, because this company is already serving almost all of the big guys in China. So how's it going to grow from here? We're going to address that. As usual, we'll also be exploring both the bull and bear case of the company and cover both sides of the argument. And additionally, we'll look at what the Chinese fintech industry looks like right now. What sort of advancements are we seeing over there? Why the adoption has been much faster than in America, and on the flip side, we'll also identify the most high risk and cutthroat areas in Chinese fintech, which investors will want to avoid. So this is the next video. And then the one after that is going to be for Jaguar Investing. The company is called St. Joe, symbol JOE. This is a small cap real estate developer based in the southeast region of the US, with an abundance of land set aside for development over the next several years, and a near triple-digit return on capital when it comes to their residential projects. So this investing idea is going to have about a 3-year time horizon, and if my bull case is correct, I think the stock could more than double from here. But technically speaking, I think the stock is due for a near-term pullback because the RSI is currently above 80. And so I'm anticipating the stock to settle down for a bit while I work on Chinese Tech Demystified. And then by the time this one goes out, we may have a better entry.
Of the two, I'm very interested in your video on OCFT. I think Joe will also be a good one, but OCFT, this company has been posting a revenue growth rate of 40% year over year on rather very consistent basis. And as you said yourself, it has pretty decent and strong exposure to all the largest financial institutions in China. $8 billion in market cap, very well established, a strong history of the revenue and free cash flow generation profile, and the stock has been basing for the last 3-4 months or so. So I think there is a very nice technical setup here for potential next leg higher in time. So I'm looking forward to your work on this one, folks. I'm gonna take a quick turn over here. Sorry, Chronicle. But InMode, one of our favorite medtech name. Right? This company just in the last couple of minutes has started to really rip higher. It closed at $39 per share, and it was hitting as high as $52 per share just a couple of minutes ago. This is a former Jaguar top pick, and they just reported, or they pre-announced rather, Q3 revenues of $59 million versus $38 million estimate. And they're also raising the fiscal year 2020 revenue guidance to $193.5 million versus $159 million in estimate. This is just incredible. What a huge beat and a sharp recovery from COVID-19. And so I know many clients, I had just one client that texted me also basically saying InMode, boom. Yep, it's going to open up at well through all of this VOP congestion levels. So it's going to be a fun one for a lot of Jet clients just now. All right, looking forward to your videos on both of those Chronicle, OCFT, as well as JOE. The stock has run quite a bit in the last couple of days on very heavy volume. So, all right, we'll see you in the chat room shortly. Thanks for joining.